Okay, this is Thomas Freed on the Liberty Works Radio Network. This is the Truth Attack Hour, and yes, that's right, folks. We're back with the Truth Attack. Okay, I want to get right into the discussion today, but let's go through the preliminaries here. We are the Liberty Works Radio Network, and we do need the support of the members of the listening audience to keep the broadcast network operating and the shows coming. So if you enjoy the information, the lectures, the topics, the revelations, and the guests and the hosts on the other shows on the network, we sure would appreciate it. If you could find your way over to the LibertyWorksRadioNetwork.com website, get signed up as a monthly subscribing member. Even if it's as little as $10, $20 a month, every membership counts, and we do need your support to keep the information coming. And we're one of the few, if not the only network in the country telling you the bottom line on what's happening in this country. I know that's what I've been doing because I've been teaching on this show for about 15 years the constitutional fraud that we know is the income tax. And I want everyone to think about this for a minute. What would George Washington, Thomas Jefferson, John Adams, Benjamin Franklin, James Madison, any of the founding fathers, what would any of the founding fathers say to the idea that every single time an American citizen earned $1 anywhere in the 50 states, the United States of America, they would owe a portion of that dollar as tax to the federal government? What do you think? Would they say that's inconceivable? Inconceivable would be their reaction. Not within the realm of possibility under the constitutional law we have provided. It is impossible, legally, constitutionally impossible for you to owe tax to the government because you worked in the state in which you live. It has never been a tax on your labor or your earnings or your rent or your interest or your dividends or your alimony or your tips or your commissions or your wages or your salaries or even your compensation. None of it is taxable to the American citizen. Income is not the object of the tax. It is not the subject of the taxation. Income is the yardstick that measures the amount of tax that is owed on the earnings derived from the federally taxable activities and transactions that you may have engaged in that were subject to a federal tax by impost, duty, or excise under Article 1, Section 8, Clause 1. Income is not the object. It is not the subject. It is the yardstick. It is the mechanism by which the amount of tax is measured. But if the earnings aren't derived from a federally taxable activity, there is no tax to measure. Now, impost taxes foreign persons, foreign imports, and in foreign places. And the original legislation was a tariff act, which is one form of an impost, which taxed foreigners in America and all persons in the territories and possessions, a foreign place where the United States had territorial and legislative authority without limitation under the Constitution. And technically, in the possessions, it's not a direct tax. It's a tax on the privilege of being protected by the federal government in the territory, as the federal government will ride in with the cavalry and kill the Indians if they try to harass you, or a foreign military, theoretically. So in the territories and the possessions, the government can tax everyone that lives there. And that, of course, is motivation to hurry up and become a state. Because once you become a state, they can't tax your activity in the territory, in the land anymore. So impost taxes foreign activity. The original act of 1913, the income tax legislation, the Underwood-Simmons Tariff Act of October 3rd, 1913, was a tax imposed on foreign persons that is collected at the source by withholding agents who collected the tax from non-resident aliens and foreign corporations, and then, as the collectors of the tax, were made liable for the tax they had collected from those foreign persons. Impost tax, foreign activity, and the original tax is a foreign tax. Now, you also had the corporate tax, which pre-existed the Tariff Act of 1913. That's an excise. The excise applies to the corporate privilege and ATF, commodities, licenses, petroleum fuels, interstate transport. But if there is no foreign activity, if there is no export as a duty, if there is no commodity license or corporate, there's no impost, duty, or excise to measure by income. And what they've done, of course, is lied to the American people about the nature of the tax, claiming it's a direct tax under the 16th Amendment without limitation. And then, because it's a direct tax, they're not limited by the impost, duty, or excise source arguments that require federal taxability by indirect tax, impost, duty, or excise. So they argue it's a direct tax under the 16th Amendment, and then they don't need the indirect basis of impost, duty, or excise taxable activity. They can jump right to, oh, look, you made money. A source of gross income that is taxed by the direct tax. So now, because it's a direct tax, your rent, your dividends, your interest, your wages, your salaries, your commissions, your annuities, your tips, your alimony, etc., 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 are all suddenly, magically made taxable to the federal government as a direct tax without limitation that cannot be avoided, that enslaves the American people, and with tax brackets becomes a class legislation system of class warfare. Graduated tax brackets are unconstitutional when applied to the citizens because they are not uniform. Geographical uniformity loses its validity as an argument when you apply it to citizens, because under the geographical uniformity argument, you could write a different law, tax law, for blacks and whites, and Jews and Christians, for young and the old, for male and the female, for gay and the straight. You could write different tax laws for all those different groups, treat them all differently with different tax rates, and it would all be perfectly fine as long as everybody in each state was treated the same as everybody else in their class in all the other states. So you could legitimize, hypothetically, theoretically, having different rates of tax for blacks and whites, because, hey, it's geographically uniform. And as long as it's geographically uniform, we're allowed to discriminate on any basis, including wealth or productivity, which they're not allowed to discriminate on. It's class legislation. They wrote this all up in Pollock v. Farmers Loan and Trust. It's part of the reason why they rejected it. Or at least some of the judges raised it as a concern. Class legislation. It's unconstitutional. Geographical uniformity only works when you apply it to corporations, because all the corporations are the same. But all the individual persons are not the same. Some are black, some are white, some are gay, some are straight, some are Jewish, some are Christians. So geographical uniformity fails. There is no impost, duty, or excise basis for the tax. That's why they had to claim it's a direct tax under the 16th Amendment. That's how you get to labor. You can't do it through impost, duty, or excise. The labor of the American people aren't subject to tax under Article 1, Section 8, Clause 1. Never have been, never were. It would have been inconceivable to imagine that power into existence. The power to tax the income of the corporate person, the licensed person, and the foreign person, the privileged person, has existed from the beginning. But it never, ever, ever reached the labors of the American people conducted by right, under the pursuit of happiness, the right to work, the right to live and think and expend your own resources as you see fit under your own beliefs about God or our existence in nature or with other men. You are not to be ruled as a slave. It would have been inconceivable. And of course, they didn't do this in 1913 when they enacted the original tax laws. They enacted a tax that the Supreme Court tells us in Rushaber is collected at the source. The Act provides for collecting the tax at the source. That is, makes it the duty of corporations, etc., the withholding agents, to retain and pay the sum of the tax. The withholding agents are created in law with a legal capacity to operate under. It's Section 7701A16, same code section where the term person is defined for use throughout Title 26. The withholding agent is authorized to collect tax only from foreign persons under Sections 1441, 1442, and 1443. And then the tax collector, the withholding agent, is made liable for all the tax they've collected from the foreign person under 1461. There's your indirect application of the tax collected at the source. But when it becomes a direct tax under the 16th Amendment, you no longer do the impost, duty, or excise. You jump right to gross income as sources of earnings subject to the direct tax. So where are you made liable? There's no liability in the statutes to enforce a direct tax as a direct tax, an allegedly direct tax as a direct tax. Liability in the statutes is 1461, the name of the collector. You know where liability for the direct tax comes from? Regulatory deference under Chevron. The government argues that you're liable for the direct tax because the regulations for Section 1 flat out say you're liable for the tax. Section 1 is the tax imposed. But it imposes a rate of tax on different groups of persons, married, individual, heads of household. How are you liable for a rate of tax? How do you enforce a rate? You can't. That's why the statute doesn't say anything about liability. It imposes a rate of tax that is collected by withholding agents from certain parties who are all foreign and then paid by the collector. He never pays tax out of his own pocket. It's indirect. He turns over what he's collected from other persons. We have the collector who pays the tax, and the liability for the direct tax under the 16th Amendment using gross income under Section 61 as your basis rather than impost, duty, or excise subjectivity. The liability comes out of a regulation for Section 1 tax imposed, which the statute doesn't say anyone's liable because there is no direct liability because it's not a direct tax. But in order to show liability, because that's what you're supposed to be liable before you have to file a return. So in order to allege you're liable and need to file a return, they wrote a regulation under Chevron that goes beyond the statute. It's regulation for Section 1, 1.1-1, that's Part 1, Chapter 1, Section 1, tax imposed. The regulation says you're liable, but the statute doesn't. Now, Loper-Bright wiped out Chevron regulatory deference. So now they can't argue. They particularly can't argue because the Supreme Court says in Noor, it's not direct, it's an indirect tax. So their argument that it's a direct tax is out the window. Their argument that it's based on the 16th Amendment is gone. And their ability to allege you're liable for it is killed by Loper-Bright, ending regulatory deference under Chevron. Now you have to look to the statutes, and you can't argue the regulation when there is a statute, 1461, that makes parties, a whole class of persons liable, and Section 1 doesn't make anyone liable. You're only liable for what you have collected from other persons or for what has been assessed on a tax return. That's why they need you to file the return. That's the assessment that makes you liable because there is nothing in statute. And to cover their ass, they made up the regulation to enforce the direct tax that doesn't exist under the 16th Amendment and isn't imposed on your sources of gross income. Gross income, Section 61, only applied to persons in Canada under the tax treaty between 1918 and 1993. That's the original legislation that Section 61 was enacted under. We'll be back in 5. Okay, this is Thomas Freed on the Liberty Works Radio Network. This is the Truth Attack Hour, and we're just going to get into it. As the commercial break came up, I was explaining that the original income tax was a tariff act. That was an indirect tax collected from foreigners. And all of the limitations that I've explained, being a tax on the territories and the possessions, only being a tax on foreign persons in the United States, and on trusts, estates, corporations. This is all clearly published in the 1939 law. The classes subject to the tax are all laid out in Section 4. All of the classes are there, and that document is available on the taxfreedom.com website. I've been through it before, but the proof is right there in the 1939 law of the limited application. The expansive application didn't begin until the victory tax of World War II, which was, for the first time in America, a federal tax that reached the labor of the American people as a direct tax on everyone working in the factories and companies producing goods for the war effort, which literally became the entire country as every production line was co-opted to produce war materials. So it was a direct tax on the labor of the American people. It was a 2-year temporary war measure, and I'm sure when they passed it, they thought somebody would object, but they could drag it out in the courts for 2 years before it would get to the Supreme Court, and then, magically, the 2-year term for the war revenue measure would expire, and the Supreme Court wouldn't need to take the case because there would be no more tax. And that's exactly what happened. And nobody objected. They got away with it. And not only that, but they paid off most of the war debt in the 2 years. So Congress couldn't let the power die. But they couldn't impose another tax because World War II was ending as 45 began and came to the middle of the year. So there was no more war revenue measure, so what could you do? Well, what they did was they passed basically the subtitle C tax legislation we're under today, which has a system of collection of the tax at the source, just like 1913, only now they use a new class of tax collectors called the employer. Employment wasn't part of federal taxation from 1913 to 1945, other than the victory tax. Employment wasn't part of federal taxation before 1942. It was withholding agents that the tax was collected from, not citizens. So in 1945, they write new law that creates a new class of tax collectors, which they'd just gotten away with in the victory tax, the employer. And the employer isn't given a specific group of persons from whom he is required or authorized to collect tax, as the withholding agent was. The employer is given authority to collect tax from people who ask for it. He's not required to take it from anyone. He's only authorized to take it from people who ask for it. How do you ask for it? On the Employees Withholding Allowance Certificate, the W-4. That's right. You're asking your employer to withhold a tax that is never imposed, that you don't owe, that he can't collect from you if you don't ask for it, because the tax isn't due by law until next year on April 15th, and no one can force you to pay or service a future obligation before it is actually a legal obligation that is due, because forcing you to service an obligation that does not yet exist is a form of involuntary servitude. You're being forced to service a debt that doesn't exist yet. And it may never exist if there's no tax imposed on your sources of earnings. But once you allow the withholding at work by asking for it, by claiming single or married in 1, 2, 3, 4, 5, however many exemptions, that's asking your employer to collect tax at the appropriate rate. So they withhold not only the Social Security based on that number, but the income tax based on your request. And they couldn't do it if you didn't ask for it, because the tax isn't due until next year, and no one can force you to pay it before it's due or service the obligation without imposing the prohibited condition of involuntary servitude, which is banned by the 13th Amendment right along with slavery. So that's why they need your permission. And then once they withhold all that money from you, it turns out they withheld too much. So guess how you get a refund? That's right, you got to file a return. And that's what you get trained to do between the ages of 16 and 24 when you're single and zero, when they withhold 30%, even though you're in the 10% tax bracket, making minimum wage part-time. So you work 1,000 hours at $10 and make 10 grand, and they withhold $3,000, 30%. Come April 15th, you're not filing to pay tax, you're filing to get the 3 grand back. And then at 20, it's 2 grand, and then at 23, it's $500, and then at 24, you're trained. All of a sudden, the bottom line says you don't get a refund anymore. Now you work for me. So spend the rest of your life reporting everything you do and paying tax on every dollar you make, even though that's not in the Constitution. It's become the de facto operational practice. Under the non-existent direct non-apportioned tax under the 16th Amendment, which didn't do any of that. So how did we get to where we are? Well, the Supreme Court allowed the lower circuit courts in the mid-70s and early 80s to reverse the true position of the Supreme Court taken in Brushaber. Now keep in mind, this is the same court that gave you Roe v. Wade, regulatory deference under Chevron, and affirmative action, all of which this court has kicked out as liberal frigging nonsense made up by the same court that made up the direct income tax. Now, why it's taken 60 years for the Supreme Court to rein in the seditious rebellion of the circuit courts, you tell me. It's probably because we haven't really had a conservative court since World War II. And remember, this is the same court that gave us Korematsu. Lock up all the Japanese. No trials, no process, just they're Japanese, we can't trust them. Lock them up. It's the same court that gave you Social Security. We can tax labor. Baloney. Roosevelt's socialist court went nuts. Now, Roe v. Wade has fallen. Regulatory deference has fallen, and Chevron deference has fallen under Loper-Bright. Roe v. Wade has fallen under Dobbs. Affirmative action has fallen under Students v. Harvard and Students v. North Carolina. And the last one to go is the direct tax on income. And that goes right to Commissioner v. Glenshaw Glass in 1955, where the liberal Supreme Court made up a direct tax under the 16th Amendment that Congress authorized under Section 61. It's a tax on all accessions to wealth. Interest, dividends, wages, salaries, compensation, alimony, tips, annuities. It's all taxable now. Not because the Constitution allows it, but because the Roosevelt's liberal Supreme Court proclaimed it as a direct tax under the 16th Amendment. So why is it ending? It's ending because last year in Moore, the Supreme Court gave us a comprehensive review of all of the constitutional powers, together with the limitations that still apply to those powers without exception. And what they wrote in Moore on pages 5 to 70 of the opinion, you can go read it on my website at taxfreedom.com. It says plain as day. They repeatedly recite income taxes are indirect taxes under Article 1, Section 8, Clause 1. Not a direct tax. Indirect taxes, impost, duty, excise, foreign, export, privilege. That's it. No foreign, no export, no privilege, no tax. No tax on labor, no tax on wages, no tax on salaries. There is no tax authorized as a direct tax. It doesn't exist. It's been a constitutional fraud since 1960. issued as edict from the circuit courts, every single one, since 1980. And every single circuit points to its own asinine decision, unconstitutional, communistic application in place of the constitutional tax actually authorized, sustained, and upheld by the Supreme Court every time it was tested. It's been a judicial rebellion of constitutional sedition of the highest order. It is the judges that have betrayed the American people and thrown you to the socialist wolves to have your substance eaten out, to be harassed by bureaucrats and tyrannical revenuers, to be ruled rather than represented. It's all been a constitutional fraud. It even goes further than that. The court says in Moore, on pages 5 to 7 of the opinion, in this comprehensive constitutional review, that all direct taxes must be apportioned to the states for payment in proportion to the census. That means it's impossible, for one, the income tax to be a direct tax because it's indirect, and two, if it is direct, like they've claimed for 60 years, then it cannot be enforced against the individual citizens because direct taxes have to be apportioned to the states for payment and cannot be presented to the individual and demanded that he pay it as a direct tax. It doesn't exist. It's not in the Constitution. It's not in the statute. What's in the statute is the indirect collection and liability of the collector. It's regulatory deference and the unleashing of the socialist bureaucracy to feed on the American people by a seditious and treasonous judiciary that aligned themselves with a socialist, literally communist agenda with its tax enforcement opinions, decisions, and holdings. Why do I say communistic? Oh, that's extreme. Oh, that's ridiculous. Is it? Do you know what the second plank of the Communist Manifesto is? Go look it up. Well, no, don't look it up. I'll tell you. It's a heavy, progressive, or graduated income tax. That's where direct income tax comes from, the Communist Manifesto. That's where graduated class legislation, class warfare, that's where it comes from, the Communist Manifesto. The judges are enforcing communism. Now that's treason. Every single one of them should be shot, hung, and drawn and quartered. Or at least tarred and feathered. Absolute judicial treason. Constitutional sedition of the highest order. Different rates of tax for the wealthy, the middle class, and the lower class. Oh, and we'll buy the votes of the poor by not taxing them at all. This is exactly what one of the justices wrote up in Pollock v. Farmers Loan and Trust. This is exactly what he said would happen. Class legislation, different law for the rich and for the poor. And you know what's so absurd about that? Do you know what happens every time you write different laws for the rich and the poor? What happens? Do you know? Can you guess? That's right. The wealthy buy the law. And it never operates against the wealthy. It only operates against the poor. Because they use their money to control the men writing the law. So when it's supposed to help the poor, it doesn't. It inures the wealthy. And the poor get robbed and the wealthy get richer. We'll be back in 5. I hear the second commercial break coming up. This is Thomas Freed on the Liberty Works Radio Network. Stay tuned for more on Moore. Okay, this is Thomas Freed on the Liberty Works Radio Network. This is the Truth Attack Hour, and let's just get right into this. As I was explaining when the commercial break came up, the Supreme Court has finally, after 55 years, 60 years, given us a ruling, a comprehensive review that included a comprehensive review of the constitutional powers to tax, together with the limitations still applicable, without exception, to each form allowed, direct and indirect. And of course, they did that in the decision of Moore et al. V. United States. It's 602 U.S. 572 2024, I think is the case site. And as I said, they declared, like they did in 1916, like they did in 1937, that income taxes are indirect taxes. And direct taxes, wherever they exist in whatever form, must be apportioned to the states. So the IRS and the government's enforcement of the income tax as a non-apportioned direct tax without limitation is basically pronounced by the Supreme Court to be a complete and total 100% constitutional fraud that the government, the DOJ, and the lower courts have perpetrated on the American people for over 60 years of communistic tyranny, destroying lives, jobs, marriages, stealing homes, pushing people to suicide and divorce. Everybody in the country knows. Everybody knows there's something incredibly un-American and wrong, fundamentally wrong, with the way the IRS behaves with American citizens with respect to the enforcement of the income tax. Everybody knows there's something wrong. And this explains it all. My videos, the articles, the lectures, the information at tax-freedom.com, the documents available to help you answer the IRS and the DOJ at irszoom.com, my books, the videos on my YouTube channel, Thomas Freed. You can link to it from the taxfreedom.com website right here. It's all there. It's all exposed. Everything that they have lied to the American people about regarding the direct taxation of your labor as a function of the 16th Amendment, the inconceivable tax on every dollar you earn, is all exposed as a fraud. But there's one more thing I haven't mentioned. You remember Donald Trump enacted a new tax law in 2018. And as part of that new tax law, Congress put on the congressional record a constitutional authority statement declaring the constitutional authority relied on by Congress in writing the new legislation imposing the new income tax, which provided for new brackets, new thresholds, greater deductions, completely rewriting the code. So they needed a constitutional authority statement, which has been required to be published on the congressional record before any piece of legislation can go to the House for debate as a bill since 2010. Required constitutional authority before your bill can be discussed. Tell us why you think it's authorized under the Constitution. So, when they wrote the new tax law that Trump signed in December of 2018, Congress enacted 2017, Congress enacted in November of 2017, and became law as of January 1, 2018, new income tax law. What was the constitutional authority statement? What was in the constitutional authority statement that Congress had to place on the congressional record before the bill could be debated and voted on to become law? Did Congress write that the constitutional authority was the 16th Amendment? No, they didn't write that. What they wrote is that the constitutional authority for the income tax legislation was Article 1, Section 8, Clause 1. Didn't even include the 16th Amendment. which could be could be argued as part of the authority to tax income under 181, but they didn't. They had 181, impost, taxing foreigners who the tax is collected from since 1913, duty on exported goods, which we don't have any exported taxes, duty-free shops, no export taxes, and excise, commodities, alcohol, tobacco, firearms, licenses for said commodities, and the corporate privilege. There is no privilege that's taxable when an American citizen earns $1 exercising his right to work in an occupation, a common occupation, within the lands of the 50 states, where the federal government has no territorial or legislative jurisdiction beyond impost, duty, and excise. There's no tax on your labor. There never has been. The new law specifically says the constitutional authority is 181. It's not the 16th Amendment. And then in 2024, the Supreme Court says, it's not the 16th Amendment. It's 181. So how come the tax hasn't fallen? Well, Moore was actually a case about taxing unrealized gains of an Indian company under a treaty with India. So it wasn't really about domestic taxation. But the comprehensive review of all constitutional authority to tax, together with the limitations, is the fixed foundation upon which the decision was based. And that foundation cannot change in the next case. They're not going to rewrite it. The only thing that has to happen is for those holdings to come face to face with a case of domestic taxation of income. The writing's on the wall. The guillotine has already been released. The blade is dropping as we speak. The government's head, the circuit court judges' heads, is coming off. The guillotine's going to cut their heads clean off because they've been lying to you for 60 years. Lying to you for 60 years, stealing, enforcing communism instead of constitutional taxation. And it's all out in the open now. The constitutional authority statement's not the 16th Amendment, it's 181. It's not a direct tax, it's indirect. It's not without limitation. It has to be uniform. And it's not when it's graduated. That's not uniformity with respect to citizens. And if you argue geographical uniformity, you're opening the door to having different rates of tax on Jews and Christians, blacks and whites, men and women, young and old, gay and straight, and the different tax rates for the different classes, all perfectly fine as long as each class is treated the same in every state. Baloney. Nonsense. You have no power to discriminate in law with brackets that classify the citizens into different tax rates. That's unconstitutional class legislation that cannot be enforced against the American people under the Constitution. Can't be done directly because it's not authorized, and it can't be done indirectly because it violates the uniformity clause. Geographical uniformity only works when it's the corporate person, the foreign person, the licensed person that's being taxed. Those parties, Congress can discriminate against, just like they can discriminate against the inanimate commodities and articles of commerce subject to excise taxation, which was the basis for the tax brackets being justified by the Supreme Court in the 1880s. And I believe this is recited in Pollock as well. part of the class legislation discussion. Congress has the power to discriminate against the inanimate commodities and articles of commerce, to discriminate against the privileged corporate person, the foreign person, the licensed person, depending upon how much profit, income, they realize as a function of the privilege they enjoy. So if you're a company selling alcohol, tobacco, and firearms, and you make $1 million, you can be taxed at a different rate than a small business making $10,000 doing the same activity. Because Congress can discriminate against the inanimate corporate person, or the privileged foreign person, or the privileged licensed person, based on how much return is realized from the privilege enjoyed. That return from the taxable privilege enjoyed is then measured by income for tax. Profit after expenses are deducted. And that's how corporations avoid paying the tax. And by not allowing citizens to deduct any basis or expense associated with their earnings, like rent or the mortgage or gas or the car payment or food, all of which the corporation deducts, the telephone bill, all of those expenses get deducted by the corporation, so they don't end up owing any taxes. They had no profit. Oh, yeah, we had $100 million in profit on December 1, but we spent a lot of money, and at the end of December, we only had $1 million left. Here's your $330,000 on $100 million in profit. Sorry, guys, expenses ate it up. So the corporations shirk the burden because they're allowed to deduct expenses, which wipes out their profit by planned accounting. Meanwhile, have you tried to deduct your rent or your telephone bill or the gas to get to work or the food you need to eat at lunch while you're there? Oh yeah, all of those deductions are disallowed for you. The tax becomes a tax on your labor, not your profit, not your income, because there's no profit in an hourly wage. It becomes a direct tax on your earnings as a function of work. That's communism. That's not constitutional taxation unless you're a non-resident alien or a licensed person or a corporate person or in the territories and possessions, where the federal government isn't limited and can tax everyone on the basis of the privilege of being protected by the federal government in the possession. So, we have a completely fraudulent system of taxation. The Supreme Court has exposed it. The new law kills it. If the courts don't come to the altar and give it up and admit that they can read the English language, which so far they haven't proved they're able to do, I don't think they know how to argue law anymore. They've been invoking erroneous opinions for so long that our government no longer argues law. They just argue opinion after opinion after opinion when you point out all of those opinions relate to the old tax law. There's a new law of January 1, 2018. All of those opinions don't count, because your alleged constitutional foundation was changed by the new law. So now you have to review the matter de novo. You can't invoke any old opinions, and that means the government can't argue, because that's the only thing they've been arguing for 50 years, are erroneous old opinions that are exposed as being fatally erroneous by both the constitutional authority statement for the new tax law and the Supreme Court's decision and more. Like I say, the blade has been released. The guillotine blade is halfway down, aiming at the judges in the circuit court and the DOJ attorneys, defrauding the American people. The whole judicial system is about to be beheaded by this reality coming face to face with a domestic tax case where these arguments are properly argued on the record. So the system's going down. It's just a matter of time and people spreading the word. So talk it up, taxfreedom.com. Let's get educated.